Hello traders. So after those two videos, you might ask or think that so it is really easy to make money in the stock market. I would not want to tell you that it's easy, but there would be rainy days and there'll be days when you get full sunshine, and there'll be days that are just flat with not much action. For you to have a look of what it can be, because you guys were fortunate enough to have portfolios that mostly are growing from the get-go. This is mostly because of the period we are entering. Now we are in November. It's only less than a month before the year closes. So during this time, most people are not looking to invest and take out their money. They're just looking at putting their money aside until the next year. So mostly like these big companies that get money from investors, they are mostly pumping the money into the stock markets. They are not looking to take it out and do this and that. They are stocking it until they come to next year, where they begin to ask again, where do we move our money? So to have a better view, we'll have a look at a historical performance of some of the portfolios. Like this group 1 is a group that I started with, and we created portfolios on the 22nd of September. As you can see, a week after they opened, everyone was in the red. Nobody was making money. Then it continued on and people kept losing money. And this was a day that we had looked at and said, this could be the bottom or the lowest that the markets are going to go. And as time moved on, we were able to see that we were right. Indeed, this was the lowest. Now, the lowest position is important in that if you are able to predict it fairly good, you can look to buy at that position, which means you're buying at the cheapest. Then whatever comes now in terms of price rises, you are gaining. So as you can see, people went for many days in the red. Some guys went they went over a month in the red. So these guys really experienced what volatility of the markets look like, because when you're sitting in this red position, you are looking at like real money has been lost in your account. Now this is where people will say stop loss. Probably when they see a loss coming there, they see it continues there, then they say stop loss, sell all my shares and investments, get out of the market. Now after they're out of the market, what does eventually happen? The price begins to pick up. Now when price picks up, these people are probably sitting on outside looking and saying, oh, okay, is it going to go up? Is it going to do what? So they'll probably try to come back at this point here. Now at this point, you'd see that from minus 243,000 to 100,000, they would have lost about 250,000 worth of profits. So they come into the party when the food has already been served and they are looking for the leftovers and everything. So you can see that this portfolio stands at a profit of 601,000 rand. Now if we consider it from the lowest time, we want to see how far it has gone from the lowest. So there it is. It will be 800,000 rand. Now we can look at it and say, okay, 844,917 from a portfolio of 10 million. There we can see that this portfolio overall is made 8% from the bottom. Now 8% is already more than the inflation rate, plus this is an investment you are counting from the month of October, which is close to 2 months. So in 2 months it has made 8% from the bottom dip. So 8% is really a big deal. If you look at 800,000 rand, if you are to convert that to dollars, it will be 60,000 dollars. So you can imagine if you are an investor and you have made $60,000, what can you do? You can buy a car, you can buy a small house, you can buy a plot of land, you can invest in a new company and all that. So this is the aim of all trading, to make money that you can invest in another place. Thank you.